So are you looking to grow your wealth and not really knowing where to start? Well, when it comes to investing into the stock market, I'm going to give you guys 5 different ways on how to do it. And again, there's a ton of different nuances and tricks and trade to all these different ways and other methods as well. But I found that these are probably the most common 5 ways that have been talked about. And I've practiced 4 of these 5 and looking to practice the 5th one as well. So I want to go over these and kind of show you guys my experience over the years with messing with the stock market. I have been doing this for a few years now, and I'm getting more serious about it. So I'm on my channel right here documenting the journey. So if you guys want to follow this journey as well, make sure you guys hit that subscribe button as I grow my portfolio to 100,000 here on the channel. So the first method for this is going to be investing into index funds and ETFs. So this one is like a really good one for beginners when you first getting started, just kind of like getting acclimated, whether you don't know which app to use or whatever it may be. I'll try to link some of the apps down below as well. That way, if you guys are just getting started, you can sign up and get your profiles and your portfolio set up and all those things, and just kind of learning the tricks of the trade. Buying index funds and ETFs is probably going to be one of your safest and most reliable routes out of all this stuff. And a lot of people typically recommend that you go with these even if you are a seasoned investor as well. A lot of people have a good amount or the majority of their portfolio is going to be an index fund or ETF or something like that. So wrote down some options right here. You got things like the S&P 500. I'm sure that's one common thing that a lot of people have heard of over the years. The S&P 500, the S&P 500. So do research, look into that. What are the companies that are aligned with the S&P 500? How has it been moving over the years? What are the average percent growth over the years? Is it something that you feel confident in and you want to continue to put money in every month, every week, every day, every year, whatever it is that you decide to do with that one in particular? There's also other ETFs that a lot of people may be talking about that you might have heard of before, like VOO or SPY or QQQ. I personally have all three, VTI. There's other ones as well, but I feel like QQQ is probably my favorite one out of those, so I'll probably pour the most money into that one in particular. So that's just kind of based off of my experience, and it's kind of, it's heavy more when it comes to tech. So with these, it's basically like a basket of stocks. Instead of just purchasing one single stock, like, oh, I want to buy Apple stock, you buy this one and it buys multiple. So you have, 100 stocks, 150, 500 stocks, whatever it is that that index or that ETF has, it's going to basically purchase the whole basket and buy like a sector of an industry or whatever it may be. So they all kind of serve different purposes. A lot of them are similar because there's a lot of similar dominant businesses that hit a lot of different sectors. But at the same time, there are different ones that hold different amounts from those as well. So that's where you kind of want to do your research and say, hey, do I want to get into this one or do I want to get into that one? And which one does it hold more? So that just kind of gives you guys a quick briefing of kind of where things are at. I can dive deeper into all these specific topics if you guys like in individual videos, but this isn't like a full breakdown video or anything like that. Just kind of wanted to get your wheels turning on those in particular, and I'll try to list it down below in the description for you guys if you have any questions. Now the next one right here, like we talked about, this is going to be number 2, and that's going to be investing into stocks. So basically, like we said, either you buy a bundle of them and have multiple stocks in that, or you go out and individually invest into stocks. Do you want to buy Apple? Do you want to buy Tesla? Do you want to buy Microsoft? Do you want to buy Google? If you buy those individually, you can purchase those stocks individually. Now, another thing that I feel like we heard before, and I still hear to this day, a lot of people say that, oh, the stock is too expensive, I can't afford it, whatever it may be. Well, now they have this thing called fractional shares. So through a lot of these different apps now at this point, they've gotten rid of a lot of these different fees, and they try to roll it into this or do that or allow you to purchase a little bit instead of the whole thing. So now, instead of back in the day like it was like either you bought the share or you didn't, and it was buy it for that price. So if the share was $75 and you bought one, you paid $75. Well, now you're like, hey, I got $100, I want to put it into this share. Well, it's going to say, all right, cool, you have 1 point whatever you have, or say, hey, I don't have the $70, I don't have the $75, I only got $50, and say, okay, you have point this of the stock. So that kind of gives you a better idea of how it works, and then also it allows you to then enter in and purchase that stock. So if it's $1, if it's $10, $100, $1,000, 20,000, 100,000, whatever it is you want to put into that stock, you can just take the money and put it into the stock. You don't have to worry about, oh, I have to buy X amount of shares of this stock. Now, when it comes to purchasing stocks individually, this was another note that I had. The goal is typically for a lot of people to get over 100 or 125 or 150 shares of a single stock, if that's something you want to do with one of your investing styles, because that goes into options trading, which we will talk about a little bit later. But being consistent with the individual stocks is going to be a big thing, because if you go out and buy 20 different individual stocks, it's like you might as well just bought an ETF and played it safe like you did on the first strategy, because you're doing the same thing, except for now you have to manage all these when you could just purchase it through there and it'll all be managed for you by someone else. So that's a way of going about it as well. So I usually say, if you're going to purchase individual stocks, buy maybe like 3 to 5 max, and then from there, like if you do buy more, maybe like be dabbling with them, but you don't want to continue to spread your money into all these different things while you're still also buying an ETF, because that's like kind of pointless in a way. If you kind of get what I'm saying, it's kind of like contradicting itself at the same time. So just thinking about that when it comes to the strategy of purchasing individual stocks. Now, there's going to be like learning the fundamentals and technical analysis of the stocks and how they move and all those different things. You want to be like a day trader and everything. Me personally, I'm like, set it, forget it, let it go. It's going to be there for a long time. Is this going to be, 2 years, 5 years, 10 years, 20 years? How long is the play going to be? If you want to be a day trader, again, that's a whole nother thing. That's like literally trading stocks multiple times throughout the day, checking the charts, doing all the different stuff. That takes a lot of time and effort, and there's a bigger learning curve. It's harder, and you can lose a lot more money faster doing it that way. So I always tell people, wait on that. Just kind of get started, get your feet wet first, and then come in and do those type of things later down the line. Now, the next strategy is going to be going for dividend stocks. So this one in particular is going to be a stock that actually pays you a dividend out, whether it's monthly, quarterly, whatever it may be. So typically what that means is you could buy a stock and it could say let's say it has like a 5% dividend. Well, they're going to split that up throughout the year, and they're going to pay you out based off of the value of the stock and how many shares that you have every quarter. So they're going to cut that into 4 quarters, and then they're going to pay you out every quarter throughout the year, so every 3 months. And that's a way that a lot of people do it once they get a more established portfolio. It's hard to make a lot of money off of dividends initially. It's good to have some in your portfolio. And there's this thing called the dividend reinvestment program, and that's what also called the DRIP. So basically you take the money that comes from the dividend and you put it right back into the same stock that you got the dividend money from. And then that allows it to stack and pile up more over time, which then we call compounding. And that allows the money to grow faster. Now, when people get a lot of money and they have 100,000, 200, 500,000, $1 million in their portfolio, now when they do that, it grows even faster and it grows exponentially, as you see. So it takes time. You got to start somewhere. Remember that. So again, whether you're getting 2 cents or 7 cents or $1, you have to start somewhere. And that's a great beginning, because a lot of people say, oh, well, I'm not even making nothing off of it. Yeah, but then if you wait 5 years or 7 years or whatever, next thing you know, that same investment that you had is now starting to grow, and it's going to start moving like this upward on the chart. And you're going to be like, yo, I'm making a bag. I could retire off of this money. So dividends is great for people that are retired and want to live off of that, or use the money to donate to something or whatever it may be. There's a lot of different ways of going about it. And if you can build a multi-million-dollar portfolio, you can definitely make a couple $100,000 a year with no problem through just dividends and live off of that income. And we see that happen with a lot of people that are older. So that's something to think about, of how you can build another way of making money for yourself without even working when you get older. And let's see, I got another note on here. Great for long-term wealth investing. Exactly, that's what it was. Okay, The next one, for the fourth note, for the fourth style, this is one that I haven't personally done yet, and this is Robo-Advisors, or whatever you like to call it. It's kind of hands-off investing. They'll have this new AI tools where you can pay for these apps, and it'll allow you to go in and say, hey, I want you to do all the work. This is my style. This is how aggressive I want to be, and it'll go through and pick all the stuff and do the work for you through the AI and the computer system and make the deals and everything. So if that's something that you want to do, I'm still kind of scared of it a little bit, but if that's something that you want to do, it's definitely a new style that a lot of people have been talking about, a lot of people have been trying, a lot of people have been doing. If you guys want to see me do it and try it, and I can be the test dummy, let me know. Let me know down below in the comment section. I'll make that happen for you guys. But definitely a new interesting style. Now the last one is going to be options and fractional shares. So we talked about fractional shares earlier, right? You can buy just a little bit of this, a little bit of that, and you don't have the entire share of it, and stay consistent with doing that. And then the other one is options trading, like we talked about earlier. Now what people do is make an income off of options trading, and you can actually make more money off of options and make a full income, monthly income that continues to make the money right there on the moment every single week or every single month as you do options trading. Now this is going to be something that you're going to have to be, I guess, a little bit more technical, strategic, and knowledgeable, and aware of your environment and what's happening, compared to, like I said earlier, setting on a stock and say, hey, I know this stock's going to go up. I got a very strong feeling with this one. It's been a great stock over the past 10, 20, 30 years, 15 years, whatever it is. And I have, no problem with continuously investing into this stock. So that's a way of going about it. Or you can look at it as options and say, okay, I have 100 shares of this stock, and I'm going to start doing contracts with it and making money off of it passively through these contracts. Or you can go through and say, hey, I don't have enough shares yet, which is what I'm doing. I actually just did my first options contract not that long ago. I don't have 100 shares of any stocks yet, but I can still buy these contracts and buy calls and then still make money that way. So it was kind of cool because I bought a contract on Nvidia the other day, which I'll be talking about later this week. But bought a contract on Nvidia, and the call is for a whole year out. You can do them for every Friday, every couple weeks, every month, whatever you decide you want to do. I did a year because, again, I like to play the long game, and I feel more confident in that right now, just based off of my, I guess, level of skill when it comes to stock investing. So that's something as well that you can do and still be able to have a chance to get in and make money. Now, if you guys want any more in-depth, like I said, explanation of how individual these sections work, like how they work, I can then make a separate video for you guys. But I'm just kind of here to document my journey, what I've learned. If you guys have any other thoughts or impressions or questions or whatever it is, let me know down below in the comment section. Again, we're here to help everybody, so we're not here to bash anybody. I'm trying to just make sure that I document my process and what I know and continue to learn and grow. And then also everybody that's watching can do the same thing. So I appreciate you guys for watching. Again, if you guys haven't, make sure you guys check out the links down below. I'll have more information and different places where you can sign up. There's free stocks on those apps as well when you get signed up, which is dope. So I think that should be good. Let me see, make sure I check all my notes. I wrote some notes down. I've been free flowing since I started making these videos, so I'm not really trying to be all extra and uptight, you know what I'm saying? I'm just trying to talk to the camera, document my process, and let you guys know how I'm doing, see how you guys are doing, and keep updated with the game. So I think that's it. If you have any other questions, like I said earlier, let me know. And again, this is no financial advice. I'm just here documenting my process. Do what you want to do, take what you learn from it, and go make actions however you decide to. But appreciate you guys as always. I'll see you in another video.